Hello, my name is Wrighton, the head of international equities for Barrow Hanley and portfolio manager on Barrow Hanley's emerging market equity strategy. I'd like to provide a brief update today on the emerging markets for the fourth quarter of 2022. After a difficult start to the year, with the first three quarters showing broadly down for emerging markets in terms of performance, the fourth quarter marked a meaningful inflection, with the MSCI EM index finishing up approximately 10% on the quarter, while the Barrow Hanley Emerging Markets portfolio finished up approximately 13% on the quarter. Within the index, all major sectors finished up on the quarter, as did all the major geographies in terms of Asia, EMEA, and Latin America. We think that the setup for 2023 remains extremely favorable, and so far within calendar 2023, we've seen a continuation of the strong performance. We think that Asia and broadly emerging markets have lagged the rest of the world in terms of a normalization from the COVID pandemic. And we think as we move forward, there are multiple catalysts that we think are going to unlock a lot of value and serve as a very nice tailwind to growth going forward. The largest of those catalysts, we believe, is going to be the normalization coming out of China. And despite the rocky start to the fourth quarter with the end of the Chinese 20th National Party Congress, concluding with the unceremonious removal of the former leader Hu Jintao, we believe that the market moved on quickly to focus on these bigger issues in terms of the end of zero COVID in China and also the various stimulation actions that the government has taken to reignite growth. Going forward, we remain, broadly speaking, equal weight to Asia, with a notable underweight to the country of India that we think does not have attractive valuations in terms of bottom-up investment opportunities. And then within Asia, remain overweight on China and also a modest overweight on the ASEAN region. In terms of the other regions for emerging markets, we remain overweight Latin America and underweight on the EMEA region. We think in terms of the broader index and emerging markets versus the other asset classes that investors can look to invest in, we think the setup is very favorable and asymmetric. And what we mean by that is we still see a lot more depressed valuations on companies where we see the operating fundamentals more depressed than areas like North America and Europe. We think as the year 2023 progresses and plays out, we're going to see a normalization here. You're going to see higher economic activity. You're going to see greater operating leverage kick in. You're also going to see the strength that we've seen in the commodity index continue to flow through to help out the various EM economies. We remain confident that our portfolio is positioned for further success for 2023, and we believe that investors should be increasing their exposure to emerging markets at this time. Happy to discuss any of these issues in more detail. Thanks for listening.